The Turkish lira surged by more than 2% against the dollar on Thursday after the central bank raised its key lending rate beyond market expectations. Turkey's GDP growth outpaced all but two countries last year, but more retail spending is also driving up prices. And the government says reining in inflation is its top priority. Mobin Nasir reports.
Unlike many other economies, Turkey avoided complete lockdowns and managed to keep many of its industries running despite the coronavirus pandemic. That helped boost GDP by 1.8% in 2020, but it's also driven consumer spending higher, which in turn pushed up prices of food, appliances and other retail goods. Now the central bank is clamping down on rising inflation.
Domestic demand conditions, cumulative cost effects, increasing international food and other commodity prices, and high levels of inflation expectations continue to affect the pricing behavior and inflation outlook adversely. Considering the upside risks to inflation expectations, the Monetary Policy Committee has decided to implement a front-loaded and strong additional monetary tightening.
It's hiked the benchmark interest rate by 200 basis points, twice as much as market expectations, to 19%.
It was a surprising decision. I still think 100 basis points would have sufficed, but 200 basis points is a kind of a message to the market that CBRT will not stand silent. It will not get its credibility called into question. And this message was heard loud and clear.
The tighter monetary policy is just one of a slew of measures that the government is taking to rein in price hikes. Ankara is also cutting taxes for 850,000 small businesses to help lower their costs. It's subsidizing the agriculture sector to boost its output and replace food imports. And it's investing in nuclear energy to cut reliance on oil and gas imports.
One of the priorities on our agenda will be the fight against inflation.
While higher borrowing costs could dissuade some people from spending, analysts say it means higher returns for foreign investors.
In a developed market, you have basically one way in which interest rate hikes influence the economy, and that is it decreases consumption, it decreases investment. But in emerging markets, it influences the international appetite towards that market, and that's what's happening in the Turkish case.
If more capital flows into the economy from abroad, it could boost growth while keeping inflation in check. Mobin Nasir, TRT World.
Well, for more on this, Taha Arvas joins us now from Istanbul. He's an economist and a columnist for the Daily Sabah newspaper. Great to have you back with us, Taha. Now, on Wednesday, we know the world was watching to see what the US Federal Reserve was about to do, and they said they were going to keep interest rates at historic lows near zero for at least another 2 years. The Turkish central bank has done the exact opposite of that. In fact, it's raised interest rates by double than what many analysts were expecting. Can you tell us more about why the Turkish central bank is tightening monetary policy right now?
Sure, Oscar. The Turkish central bank is following in the footsteps with its other emerging market peers. The coronavirus pandemic has differently affected emerging markets, as the Economist a few minutes ago was saying in your piece there, as it has developed markets. Emerging markets, including Brazil, which just hiked yesterday, are forced now to increase interest rates to avoid currency depreciations, because ironically, the 0% interest that we're talking about in the United States for the next 2 years will most probably lead to inflation in the United States, which will ultimately lead potentially to rate hikes, which means or an increase in the yields on bonds there, which means people will invest in US dollars and move away from emerging markets. So to dissuade people from doing that, emerging markets like Turkey have increased their interest rates here.
And of course, another reason why interest rates are often hiked is to rein in inflation, which, as we know in Turkey, continues to be a problem. In fact, consumer prices have risen for a fifth straight month in February to reach almost 16%. The government says it wants to make price stability in Turkey its top priority. How can it achieve that?
Well, I think one of the steps you've seen here is by front-loading the interest rate hike, as the piece there mentioned. The central bank is trying to stave off rather any difficulty that we'll have in the future with increased inflation. So this is one of the steps it's doing. It's kind of cooling off the economy because, like you said, Turkey, the growth last year of Turkey was in the top 3 in the world, and so it's taking these steps to kind of slow that growth, and that this should also help. The appreciation of the lira will help import prices, and as Turkey is an energy importer, this will help decrease the price of energy in lira terms. So all these will help to decrease inflation. We see here food markets, and a large part of the price of any food is transportation and distribution, and that means energy, which means a stronger lira will be better poised to combat increases in energy costs in lira terms.
Can I ask you about another significant development? The European Union has frozen plans to blacklist more senior executives at Turkey's state-owned Turkish Petroleum Corporation. This is all to do with Turkey's exploration efforts in the disputed waters of the Eastern Mediterranean. Can you explain to us, why do you think EU leaders have had a change of heart?
I think initially there was some saber rattling going around in Brussels, and it was kind of a ploy to see how much they could force Turkey to step back from its position of sovereignty, especially in the Mediterranean waters. And I think both sides kind of came to an agreement that we're in a global pandemic where there's problems all over the world. It's better to resolve these problems diplomatically and through multilateral talks. And I think that's the way that both sides are going at this. So the EU has realized, just saber rattling and just, being belligerent won't help anyone. And I think the Turkish side is also trying to come to a consensus with the European Union, and that's what's happening. So I think that's why we hear news out of Brussels in that respect, and that's great news for both the EU and for Turkey.
Okay, Taha Arvas, always a pleasure to speak with you. Thank you again for joining us.